Good morning, good morning, good morning, everybody. It is Thursday, March 2. And you got yourselves a gap down. Yeah, we've gapped down and we have come down quite nicely. But before we go through there, a lot of you see me talking about range, and range matters. And where I'm looking here, I'm just specifically looking at range, right? February 6th, 31 points. And you keep bringing this down. Keep on bringing it down, bringing it down, bringing it down. 33.57, 33.56, 35.17, 28.52, 32.68 yesterday. These little baby ranges, they're really hard to go out there and trade on your calls and puts in a regular intraday session. The spreads, yeah, trying to play those bullish puts, and the risky ones are getting run over. The safe ones are not getting touched because you've got this nice range. But to bring to your attention where this tight range has happened before was over here in November as we were making the incline up to that 4196, 4196. We were having really, really tight ranges from the middle of November through the middle of December. We got a good day when Powell came out and spoke, and we're going to get Powell coming out and speaking as we go into the middle of next week. But again, coming back, looking at these tight ranges, you know, not something that is out there and being fantastic, but what is and what needs to be remembered is we are getting closer to our full moon. Full moon is coming here on Tuesday, March the 7th. Wrong screen, whatever. Tuesday, March 7th is our full moon. Where we are from a wider point of view, looking here on the Dow, made it very clear to look at that true strength index and the crossover. Not good, not good at all. But as you can see here on the Dow, you're holding right here, right around that 32,500 area. 32,500 happens to be your 50 retracement from the all-time highs to the October lows, right there at that 200-day moving average, just barely being smelled on, being very strongly held off of. Oversold over here on the daily, running oversold ever since the middle of February or late part of February. Come over here onto your NASDAQ, and your NASDAQ, you can see this massive decline down here 13,000 down here to 12,000. Talking about 1,000 points on the NDX for the most part. 12,880 down here to 11,900. Stochastics oversold, true strength index, again, big thing down there. But over here on your daily, just looking at the RSI alone, not yet oversold. NASDAQ's been holding this all together. Come over here and look at your SPX. And again, same thing. For the last week and a half, ever since the beginning of last week, we've been oversold. Have this massive decline coming down. You can look at this from whatever chart pattern you want to draw on this and create a wedge. Multiple numbers of red days coming in a row when we're closing below the open, which I'll bring back over here to your attention, which is not something that I keep in track with, but you've got 1, 2, 3, 4, 5, 6, 7 days in a row where we're closing below the open. Not good whatsoever. On the close, which is where I track, red, green, red, red, where we were getting all of those sell downs off of there when we were up there, when we knew we were getting that short off of Valentine's Day at 41.59. So, looking back to look forward, coming down here, getting everything taken down to the cleaners, and then you come over onto the weekly. Now, the weekly is where I'm making that trade of the week biased opinion, and it is paying a really, really nice credit. But you got 2 days left. You got 2 days left on that, and here we are, 1, 2, 3, 4. 4 red weeks in a row that we're looking at. We had 4 here in December before we had that big climb. 4 was incredibly rare, and 2 of those were dojis, just like our beginning. Over here, you had 3. This was the major one, the March drop over here into the June lows. 7 in a row. I've gone back, a lot of you guys that were with us and went back through history, going all the way back to the 1980s. And you're probably easier to run a red light in front of a cop and not get a ticket than to see this happen. So again, just one of those occurrences and one of those views that we look at so that we can get a better idea as to what to trade. But rather than waste anybody's time, I'll bring you here. The ES for the week, 4024 was where we went up to over there, right there, 5-day view on the 27th. Boom. From that, we have now dropped 100 points through the 50-day moving average, through the 200-day moving average, which was holding. And last night we puked and went right back down to the 100-day moving average, which is where we are right now. And it goes like this.
Strike to claim it, a strike to claim it, and he got it!
That is right, I did it! That's number 5! Are you kidding me? That's right! Who do you think you are? I am! Get it right!
So with that flush having taken place, that was where I was looking for, as I was mentioning before, looking for that 39.10 plus or minus 20. Take you right down here, our 100-day moving average right here at 39.20. So within that range of what I was looking for us to be looking for a lower bottom, I would say that we have it. Coming from a full moon point of view, as you can see here, your full moons, nothing drastic to be looking at here other than you're probably looking at a much closer double bounce than you are anything else, with a very bullish higher high, higher low, and we move on into April. So again, hold on to that capital. Wait. Your time is coming, even though we do have a very nice VIX. But from a zoomed out, cleaned out view, we've not gone anywhere since May. Since May, all we're doing is bouncing around in all this. So, there's really nothing to go and get overexcited about and start talking about 4,800, 5,200. All we're doing is consolidating here, which if you go back years and years and years, that's exactly how it takes place. So here we are on what I use for the intraday. You look at this from an intraday point of view, and if you had this up on your screen, you would never make a penny. But when you put it on a 1-minute chart, you get everything as accurate as you want to have it. So anyway, here we are. We are right down, right to that January 25th low is where we're hanging right now. It would be nice to get down here to that 38.80, 39.08 was what I was looking for. 39.25, that's going to be absolutely perfect. That will give us a 38.2 retracement down to the October lows. Absolutely perfect. We're due to make contact with that this morning if we can hold this gap down, which is about 20 points right now. But from a zoom in point of view, nothing that we touched, nothing to the top, nothing to the bottom, but still looking for that lower area. That 39.2657 would be absolutely perfect if we could make contact with it and then start to move forward, as we are into that window right now for that beginning portion of the full moon. Don't want to rush into it. Don't want to start saying, yeah, the full moon is here. We've got our bottom because today's Thursday. We're in that 4-day window, but we're looking very, 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 very close to it. And even though it's broken, the VIX is doing absolutely nothing. Nothing. That 6% decline here on the SPX, without the zero DTE balloon bullshit, the VIX would be up in the 28s. Instead, here we are. And so here we are on the VIX from a 28, from where should be up in the 28s. We're just hanging on this 2102. So again, because we've got that gap down, gap up, looking at that, that's a gap to be filled without any shadow of a doubt. But we are going to be looking at this VIX coming down here into the 18s later on as we head into into March, as this full moon takes place. So again, even though it's cheap, yeah, sure, it's cheap, but hang on. We've still got a couple days left. Then we can start looking at over there to those April 4150 call or 415 calls, 4150s, and start looking at the SPY 420, 4,200 calls on the SPX. Couple more days, just hang on, couple more days. We're almost there. I will see you guys in the chat room. And I will say, that message I got from the Bloomberg reporter, I've been through this before, but it wasn't by my decision. CNBC pulled up that stock that I picked that ran like 21,000%. It was a massive, massive boost to marketing and advertising. Like I said, I asked everybody in the room. I even asked my partner, the Glacier partner, who was my aim high partner. And everybody came out with an absolute no. So, nothing to worry about. I won't even reply to her mail, her message. But damn, it would have been nice to get a little bit more broadcasting out there to bring more people in here to really, change the way that society works and start making some good money for people with good hearts. So, last but not least, I'll leave you here. NVIDIA. NVIDIA. Go back, pull up NVIDIA. NVIDIA, we are just now into the gap. Nothing exciting whatsoever, but yep, like I say, we're just up into that gap. Remove these studies. And would still like, right? Still like to get all the way into that 208, 207 gap fill. But you got to have a little bit of respect. So if anybody wants to scalp, or you're only in the March puts or you're in the April puts, absolutely go ahead, feel free. Those of us in the June puts, 20%, 30%, might have to make a decision because, yeah, we are into a certain area of it. But yeah, there's something to be done. And with Tesla, Investor Day always sells off. And here we are coming down to that 187 area for the 15-day lows, but still a long, long ways away. Long ways away from that 176, 165, but you can see it. You can see it. You can see the puke wanting to take place and take it down there to that 180, 175. So, see you guys in the chat room. Have a great morning.